Let's have a look at some more taxes we have to pay. So this time we're looking at what's called USC and PRSI. They're just two more taxes as far as you're concerned. They stand for Universal Social Charge and Pay-Related Social Insurance. Two taxes that are basically the same thing. Now, so there are two additional taxes that must be deducted from your wages. For each tax, you calculate the percentage of your gross wage. Every time you have to calculate a deduction, unless you're told the total, you're going to calculate it from the gross wage. So if you have, say, your USC, you start with your gross wage, you calculate your tax to be deducted from that. If you have your PRSI, you start with the gross wage, calculate what needs to be taken out from the gross wage, and then your income tax, you calculate your tax from the gross wage, you add all the taxes together, and you take that away from the gross wage. So this is from, I think it's Citizens Information or something. So these are the rates of USC for 2020 in this country. And the way the income tax is broken down, well, there's a similar thing happens for USC, only instead of having two rates of USC, we have four rates of USC. Now, on the first €12,012, you pay 0.05% of tax. On the next 8,472, you pay 2% of tax. And then the next 49,560 euro, you pay 4.5% in tax. Anything above the sum of this money here, you pay 8%. That is from the Citizens Information for this year. What's in your book is actually, oh no, this is it again, sorry. So how do we calculate it? So for this, it's 12,012 multiplied by 0.05. Then here it's 8,472 multiplied by 0.02. The next one is 49,560 multiplied by 0.045. And then for the balance, it's your gross wages minus all of those others multiplied by 0.08. That's not the one that's in the book. Don't worry too much about remembering these. You don't have to remember these. They will be given to you in a question. Okay, so this is the one from the book, and these are actually old values. So the first used to be that from 0 to 10,036, it was 2%. So it's 10,036 multiplied by 0.02. Then between 10,036 and 16,016 euro, it was 4%. So you take those two numbers away and multiply it by 0.04. And then anything above that, it's your gross wages minus the last threshold, which was 16,016. And you multiply your answer by 0.07. There's two zeros in there. 7%, not 0.7%. Okay, let's have a look at an example. So Sanibel earns 50,000 per annum. Calculate the amount that would be deducted from her annual pay for the Universal Social Charge. So we have the first threshold multiplied by 0.02. That's that. Then for the next amount, remember we take those two away. You multiply that by 0.04, gives you that. And then our total, or our gross wages, minus that last threshold, multiplied by 0.07, and that gives you that amount. The total USC, we add them up, and it gives us that total there. So moving on to PRSI. Okay, this is the other one that we have to pay. Now, be careful because it's usually calculated weekly, or the information is given to you in weekly calculations. So if it's about annual wages, you either calculate your weekly PRSI and multiply it by 52, or you multiply your 127 by 52 to get your annual PRSI allowance for your employee. Okay, it sounds more confusing, but it's not. It just means that there is an allowance you don't have to pay, and then the balance is at 4%. So for the employee, it's the gross weekly wage multiplied by 127 minus 127 multiplied by 0.04. If that was annual, it will be your gross annual wage multiply or minus 127 by 52. Here, let's put that in actually, just to So that will be, let's make this a little bit bigger because it won't fit in otherwise. Okay, oh look at all this. So that's going to be, okay. Let's see, where are we here? So that will be gross annual wage minus, and 52 by 127 is 6604. So that's your allowance. And that's multiplied by 0.04. Okay. And then so that would be what if you're asked to calculate what the employee pays. So that's someone who's a worker. If you're asked to calculate the employer's PRSI, well then it's going to be the gross weekly wage or the gross annual wage, because we have no allowances to make, and you just multiply that by 0.1075. Okay, so weekly here, annual here, and then don't even need to put in weekly there, just the gross wage by that. Okay, let's have a look at an example. So Chloe earns 650 per week. She's in class A1 for PRSI, which is the following rates. Calculate her PRSI payment this week. So her PRSI for the week. So we take the gross wages and take off her 127, and we multiply that by 0.4%. So that's €20.92. Then her employer's PRSI, so what your boss pays for you. Okay, so that's your gross wages multiplied by 0.1075, and that gives you 69.88%. So then the total PRSI paid for you that week would be that plus that, which gives us that total there. Having a look at another example now. Derek has a gross annual income of 50,000. His standard rate cut-off point is 32,800. Standard rate of tax is 20%. Higher rate is 41%. Tax credits are 3,500. He's in class A1 for PRSI deductions, and he has no other deductions. So we have to calculate the annual gross tax, tax payable, net income, PRSI payment. So remember, this is annual, so we're going to have to multiply this by 52. So let's have a look and see how we do it. So his gross tax is the standard rate cut-off point multiplied by 20%, and that gives us that. Then his higher rate of tax is the gross wages minus the standard rate cut-off point multiplied by 41%, which is that, and gives us a gross tax of €13,620. So that's his gross tax. The tax payable is your gross tax minus your tax credit, so that's 10,120. So his net income, ignoring PRSI, so that means if he only paid tax, will be his gross wages minus his tax payable, which is 39,880. So now we have to work out his annual PRSI. So remember that €127 is the weekly allowance. There's 52 weeks in a year, so that means he has an annual allowance of 6,640. So to calculate his PRSI, we have our gross wages minus the allowance multiplied by 4%, which means that he has to pay €1,735.84 annually in PRSI. The net income after PRSI and tax is going to be his gross income minus his tax payable minus the PRSI, which gives us a total of €38,152.16 per year. So don't forget that if you have any deductions, they all have to come off the gross wages. So let's just say we had a health insurance, and you know that you pay €2,000 annually. You would have to actually take that off as well. So you would take off, you'd have your gross wages minus your tax minus your PRSI minus the health insurance, minus the USC, minus whatever else. So it's all the deductions. You always start off with your gross wages and take away all the different deductions. Okay,